This video tutorial will cover the topic of real estate salesperson commission structures. Before we can look at the real estate person commission structure, it is important to first look at the requirements set out in the legislation. The requirements for commission-only employment are set out in the Real Estate Industry Award 2020. Section 16 outlines requirements for commission, bonuses and incentive payments, while Section 16.7 provides requirements specifically for commission-only employment. When it comes to commission, bonus or incentive payments, the main requirements are that these are in addition to the minimum weekly wage. Written agreement is required that includes the method by which these payments are calculated, and the employer must account to the employee. There are strict legislative requirements when it comes to paying commission only to an employee. Firstly, the employee must be classified as at least a Level 2 employee. These classifications and definitions can be found in Schedule A of the Real Estate Industry Award 2020, and Schedule B, as displayed here, provides a summary of hourly rates of pay for the various classifications. The legislation stipulates that all of the following requirements must be satisfied for an employee to be eligible for payment on a commission-only basis. Written agreement is in place between the employee and employer, including the method by which the commission will be calculated. The employee has a real estate agent's license or is registered to perform the duties of a real estate salesperson under real estate law. The real estate employee is a Level 2 or higher employee with any licensed real estate agent or has operated his own real estate business for 12 consecutive months within the last 3 years. The employee is at least 21 years of age. The employee is not engaged as part-time or casual or junior employee. And as at the 2nd of April 2018, they can demonstrate achievement of the minimum income threshold amount, MITA, within the last 3 years. MITA stands for the minimum income threshold amount. In plain terms, it is the minimum amount that an employee must have earned in a 12-month period within the last 3 years, which is at least equal to 125% of the employee's classification rate. The minimum commission amount that the agency can pay to the employee is 31.5% of the employer's gross commission. So for example, if there is a gross commission amount of $10,000 due to be paid to the agency for the sale of the property, the real estate salesperson would be entitled to a minimum of $3,150 gross commission. Now that we have looked at what is required by legislation, let's now look at how this is applied to day-to-day business financial operations. The agency employs the real estate salesperson, and in their employment agreement sets out the amount that they will pay the salesperson as a commission-only agent. This amount may be negotiated on the basis of things like experience, time that they have already been in the industry, the results produced by the salesperson, as well as demand for salespersons. For example, the agency may offer a higher commission rate to get sales staff if they're short on this type of staff member. A common method to determine the amount of commission paid to staff is to use a sliding scale. A sliding scale commission is a percent paid by the agency to the salesperson, which slides with the increase of sales made by the agent, subject to set minimum and maximum amounts, also known as graded commission. For example, the scale may be set for the salesperson to bring in certain amounts of gross commission. The scale may start at the beginning of the financial year and start with an amount of zero income. Once the agent earns the amount of gross commission equal to $50,000, their commission will increase as per the sliding scale amount, etc. This can also serve as an incentive, as for more sales the salesperson makes, the higher their income will be. The salesperson commission is further made up of a listing commission and a selling commission. So let's have a look at how this works. The listing agent is the one that will attend the property and negotiate the total commission that will be paid by the seller once the property is sold. However, there is no commission exchanged at this point. When the property is sold, the agent will be entitled to 60% of the total commission paid by the seller for the job of listing the property. And when the property is sold, the selling agent will receive 40% of the total commission paid by the seller for his job of selling the property. It is not uncommon for the listing agent to both list and sell the property, whereby receiving 100% of the commission paid by the seller, of which they are entitled to under their employment agreement. In this example, the real estate salesperson is on a 50% commission rate. He lists a property for sale at $499,000 and at this stage receives no commission of the 3.3% rate set for the purpose of this example. The salesperson will only receive a commission if and when the property sells. If the property is taken off the market and the sale does not eventuate, the agency and as a result, the salesperson will not receive any income. When the property is sold by the same real estate salesperson that listed the property for sale, let's say for a price of $480,000, the total commission based on 3.3% total commission is $15,840. This is then split between the agency and the salesperson involved in listing and selling the property. So the salesperson will receive a gross commission of $7,920 and so will the agency. Let's now have a look at an example where there is a separate listing and selling agent. The total commission paid by the seller is still the same at $15,840. The agency will still receive the same amount of $7,920, but the listing agent will receive 60% of the total commission they are entitled to, which is a total of $4,752, and the selling agent will receive 40% of the total commission, which is $3,168. Knowing the information we've covered in the previous slides will assist when setting goals and targets. When setting and measuring key performance indicators, knowing how the commission structure operates will better prepare the agency and the salesperson to set accurate targets that can meet the salesperson's and agency's financial goals.